If you've ever traded stocks or crypto, you know the feeling. You sit in the dark, staring at the flashing numbers, trying to outsmart a system that seems to change its mind every second. It is easy to fall into a specific trap. You start believing that making money requires a crystal ball, a secret indicator, or just getting incredibly lucky. So when a trade turns against you, panic sets in. Instead of cutting your losses, you ignore your own rules. You hold on to a sinking asset, hoping for a rebound, driven by a desperate need to be proven right. Treating the market like a roulette wheel guarantees a specific outcome. The math eventually catches up, and the account results in a total wipeout. When the dust settles and the capital is gone, the instinct is to blame external forces, a bad tip, market manipulation, unprotectable volatility. But look closely at the sequence of events. The market didn't defeat the trader. It simply acted as a mirror, reflecting a set of invisible, self-sabotaging habits. You never actually trade the market itself. You only trade your internal beliefs about the market. If you believe you have to be right all the time, you will hold losers until they ruin you. Dr. Van K. Tharp spent decades analyzing this exact dynamic. His work guides traders to recognize and break free from these psychological traps. To achieve consistent success, a trader has to swallow a difficult truth and actively unplug from their own unconscious biases. Unplugging starts with walking away from the screens and establishing a new set of rules, a framework Tharp calls Tharp Think. This graph illustrates the mechanics of profitable trading. It relies on a single, repetitive logic. Keep your inevitable losses strictly contained while letting your profitable trades run. Notice those negative dips. Each one represents 1R, your initial risk. Before you ever buy an asset, you decide exactly where you are wrong and set a defined maximum limit for that loss. This is the mathematical reality of expectancy. Because your losses are capped at 1R and your wins are much larger, you can lose more than half your trades and still watch your account grow. The math is flawless, but it is useless if you lack the discipline to execute the plan when real money is on the line. Learning the rules is only the first step. To survive the pressure of the market, you must move to the second level, reprogramming the mind. This requires pulling apart your internal programming, piece by piece. Most traders carry hidden blind spots. They might harbor an unconscious feeling that they don't deserve wealth, or a paralyzing fear of admitting they made a mistake. You drag these biases into the light. You examine them, discard the ones that cause hesitation, and consciously install new, useful beliefs in their place. That means taking 100% personal responsibility for every single result. You remove the ability to blame the market, the news, or the broker. Once the psychological need to be right is gone, the daily experience shifts. Trading stops being an emotional roller coaster and becomes the peaceful execution of probability. Put all of this together, and a fundamentally different picture emerges at the desk when you're actually trading. Let's say a sudden macroeconomic event completely shocks the entire system, and an asset's price goes into absolute freefall. There is no hesitation. The trader simply executes their predefined stop-loss. They accept the 1R loss without panic or the urge to seek revenge on the market. This neutrality represents what Dr. Tharp calls Level 3 transformation. By silencing the internal noise of fear and greed, the trader can finally view the market as it is, a state known as trading in the now. Financial success is an inside job. It is a contest against your own discipline, not against an algorithm on Wall Street. Mastering your reactions and abandoning the illusion of prediction is the only sustainable edge in investing. Upgrading your internal decision-making to handle uncertainty has ripple effects far beyond your bank account. Taking full ownership of your failures and your successes changes how you move through the world. Escaping the trading matrix preserves your capital, but the internal shift required to get there, moving from ego-driven reaction to objective probability, completely changes how you perceive reality itself.